Hello, should beginners avoid margin account? The answer is yes. When you start, just start small with your own money. And as you continue investing your own money in your account and you continue swing trading, when your account is qualified for margin, if you want to give it a try, you can, but I will prefer you just continue growing your account with your own money. That way, you can first feel comfortable with the strategy you are using. Feel comfortable um, with the stocks you are trading using that strategy. And, it will go to multiple iterations to have a watch list of stocks that work well with the strategy you are using to trade them. And once you have that curated list, you have the strategy that you want to swing trade with, because you can change the strategy, but you cannot change the stock's behavior. So therefore, instead of having different strategy for different type of stocks, if you have your strategy that you polish, improving it to match who you are and your risk tolerance and your personality type, and find stocks that match, that are comparable, that you can swing trade with that strategy. From then on, if you want to give a try to margin, you can, because you'll have used your own money to swing trade for a certain period of time, and work cautiously when you are using somebody's money. Because you are using somebody's money, you are going to work on their term. So when we go to Charles Schwab here, you can read it as I'm explaining, but they explain a little bit about margin. So pretty much margin is a loan the brokerage firm is lending you that you can use to trade with. And I noticed it last year, at some point last year, as I was swing trading, using short option on swing trading strategy, I noticed that it was saying that our account was qualified for margin. So, but I didn't do anything about it. And later on, I check on our setting to see the rate. It was 12%, but it didn't say much about 12% per year, 12% per trade, or what. I'm not entirely sure. But again, we don't use margin. We just save our money. Right now, I don't have a lot of cash in the account to swing trade, and I have a lot of stocks that I like to buy, but I'm not trading them because we will need to save money. Those that are in blue, even the one in red, are the one that, yeah, I like to buy. They are well where we want to buy them, but we do not have money in the account to buy because most of our money are already in some other stocks that we purchase. And the one that I highlighted, I purchased them already. But I'm not using margin. Also, I noticed that recently, I'm not, when I wanted to place a trade, it's not showing me, it'll show me cash available to swing trade, but it's not showing me more than what we have in the account. So that means there might be some minimum cash available you need to have, since our cash level is low, even though we have a lot of stocks in the portfolio. I'm not entirely sure, but those are just things that flash on, that show up on the screen when I'm placing my orders, that I'll read. But again, I don't use margin, therefore I cannot use my own experience to explain anything about it. But I know that it will increase your purchasing power for you rather than just using your money. But again, you want to find a sustainable way of making money. And yes, using somebody's money to make money, you will go fast. But if you are not careful, you could easily be building a sandcastle as well. So just start small with your own money, and then little by little grow your account from there. And if you have a good amount of money in the account and you still want to use somebody's money to go further, it is your choice. You just have to weigh the count as well to see if you can weather those. So when we come down to this example, for instance, they are telling you pretty much stocks, if you purchase stocks with your own money, 100 share at $50 per share, and then it went up to $70 per share, you'll make $2,000 profit, gross profit, before you pay a brokerage fee. So, and that brokerage fee could be zero, could be few cents. So you make $2,000. But if you borrow money from them, they gave you another $5,000 margin to work with, and you use it all, and you bought 200 share of stocks, and the price went up to $70 per share, you'll make $14,000. So after you took your capital out and you paid them their margin, their loan back, you'll have $4,000 gross profit before you pay the fee, the rates, or the interest on the margin. And yesterday example, the margin was like $400. The rates, the interest on the loan was like $400. So that will leave you like just $2,000 on your own. $500 will be on the side. The other $2,000 that you make with their money, you will pay them $400 out of it. That will leave you $3,600. That will leave you $1,600 there. So when we take that $1,600 divided by 5,000 that you borrow from there, it's giving you 32%. So you will make 2,000 on your own 5,000, that's 40%, and you make another 32% return on their money after you pay them their loan, the interest on their loan. If you assume that's 400 on based on yesterday example, that is, when things are going right, so you make 32% return there. If the price decreases instead, with your own money, it decreases, you can choose not to sell it. If you believe that the stocks is going to go up at some point, you can just leave that money there and continue saving money to buy other stocks while you are waiting to sell that. No one is pushing you to sell it. So, but if you end up selling it, then you lock in that unrealized loss. You lock it in, that will become realized loss, and you lose $2,000. If you borrow money from them and then it went down to $30, and they want you to, put more money in the account to offset it, or sell some stocks to pay them back, and you end up selling it instead, well, you'll have about $4,000 lost there, because again, $10,000 worth of 200 share at $30 a share would be 6,000, because you bought them at $50 a share times 200, that's 10,000. At $30 a share, that would be 6,000. So that 6,000 out of 10,000, that will give you 4,000 loss there. So that 4,000 loss, so you got 6,000 when you sold those stocks, when you spent 10,000. So when you pay them their 5,000, you'll have $1,000 left out of your own 5,000 that you use to trade stocks. Out of that 1,000, they are going to ask you to pay them interest on the loan they gave you, even though you still make money on it. Again, if you use that 400 interest, that will leave you 600. So that 600, when we take it divided by your 5,000, no, I'm not doing it right. So pretty much, it's going to be, so that means you start with 5,000, you have 600 left. That means you lost 4,400 of your own money. If we divide it by 5,000, that means you lost 88%. So in this scenario where you lost 2,000 divided by, with your own money, you lost 40%. So when you are swing trading and the price went up, you sell it. In this example, up, you'll earn 40% return on investment. If the price went down and you don't want to leave it in your portfolio, you sold it at a loss, you lose 2,000, you lose 40% of your investment. If you use margin to increase your purchasing power and you purchase more stocks and the price went up and you sold it, you'll make 32% additional return on their loan beside your 40%. If the price went down and you sold it, in this example, you will lose 88% here. So it is a higher risk, and with this higher risk, the reward is 32% additional return. The loss related to this risk is 88% loss. So you just have to see the reward and the loss to see if the risk is worth taking. But there is some middle that you can work with when you know what you are doing, because again, they lend you that much money. If you do not use it all, then you might have some room there to work with, because sometimes they want you to have some assets value in their account that they can use as a collateral for their margin. It could be 30%. So that means you wanted to make sure the value of the account remain within that. That's why sometimes when they let you know that you are falling below, you will put money in the account, or you might sell some stocks to pay them back or things like that. So again, I just feel like margin can increase your purchasing power, but if things does not go as you plan it, the loss is greater than the reward you get from it when you are using a margin. If you are wondering if your small account can be qualified for margin, you can go to their website. We are using Charles Schwab here. You can go to their website and search for it. But again, they gave some example here. If the stocks you are choosing is more than $3 per share, is one of the criteria, it will be qualified. And then it will be, selling on NASDAQ or New York Stock Exchange. But most mutual fund that you can hold for more than 30 days and single stocks and all those can qualify you for it. So, and again, how can you start using margin loan? So they give you information here as well on it. The minimum loan amount, they mention it that you need to have at least $2,000 in cash or marginal security. So that means having stocks in your portfolio. That's the way I'm understanding it here. Having stocks in your portfolio worth $2,000 or having $2,000 cash. So I would assume our account is still qualified for margin, since we have a lot of stocks in the portfolio worth 6 figure, but we barely have $100 worth of cash in the account because everything is in the stocks. But again, and you can read more about it and and see for yourself. But it just better you start small and then you go from there. So the second part of this video will be to analyze a stocks today to see if it's worth buying today using our long option and swing trading strategy. So the stocks we are going to analyze today is Meta. We are going to use maximum daily chart. And by the way, Google yesterday the price went down. So we have Meta here. We have the price on the y-axis from $0 up, and we have the date on the x-axis from the past to the present. We have our valley lines. Those are support line passing by the valley of the mountain or the bottom of the chart, the higher lows where we want to buy. And right now, Meta, today is December 18, 2025. Before the market open, we are doing analysis. Yesterday, the price went down. the price at the end of the day was lower than the price in the morning when the markets open. So we have Meta here. It touched base with our value line and start going up from there and pull back. So right now is closer to our value line than it is to the to the all-time new high. So therefore, if you want to buy it, you can buy some share today. My concern with this though is it left our value line a little bit, but it's still there. But my concern with it is that this support line is about 3 years long. So therefore, I feel like it's not really the support line. At some point, it might fall a little bit below it. I'm seeing this line here. Let's go to this. So we have this line here, and pretty much it crossed 2020 here. It went a little bit deeper there, but yeah, if you can grab one share there, it's not too far from the value line. If it pulls back lower, then you might buy some more. But again, it may not come back down, just like it might. Because it touched base with this year, went up and pulled back to it again, is what make me think this support line at some point, this support line could well just be a support line supporting the mountain that is climbing, and at some point it might pull off of it, but it could just well use it as the value line as well. So if you are not sure you can afford it, you can buy one share. If it pulls back down, you might buy another share. And if you believe, and I think it's not going anywhere, so therefore at some point it's going to go back up again, that would be my personal choice here, that it's okay to buy one share, whether it's going to continue back down to this value line or not. Frankly, I decided not to really wait too long, because one, I want to buy at the value line. Now wait to see higher lows from there before I buy. If it's at the value line is the price I'm willing to pay for it. If it's at the value line, I will buy it. If it goes a little bit below it, I will just stay negative in it until it becomes positive. If it goes all the way down to another value line below, I might decide to buy some more and learn from it. But I'm not going to wait to see higher lows from the value line before I buy, because I already did my due diligence to select growth stocks to put in our watch list. Growth stocks that have growth at the value line and growth at the top of the mountain as well. Growth both ways to invest in, so that if I purchase it at a higher price, I know that for sure it's going to go up at some point. So, but since we didn't catch it at that value line and it's not too far from it, we might buy some share. If it falls back down to the value line before start going up, that's fine. If it falls back below it, that's fine as well. But again, I don't have money to buy it just yet. I'll just keep an eye on it and keep watching it. But if you ask my opinion on it, I will say yes, it is a buy time today if you're interested in it. But just know that there is another value line below that there is a chance it might go to. When, we just don't know. So thank you so much for watching our videos. Thank you for your time. Thank you for all your comments. And thank you very much for subscribing to our channel. I'm Afiavi Liberman, creator of Liberman Consulting L.L.C YouTube channel, and ninasoap.com, our blog. On our channel and on our blog, we share different ways to save money and different ways to make money to reach your financial independence, where you do not depend on an employer to provide for your family. And swing trading is one way to make money. Just start small and grow your account from there. The way we analyze Meta if you want to have feedback, practicing analyzing stocks to see if a stock is positioned for you to buy during the week, will you please check our online store liberdownload.com, more precisely our small group online workshop, to see if you're interested and sign up, for it. The next one is Saturday, December 20th, 2025. Thank you for your time. For more tips in this series, will you please check the playlist in the description of this video, and that will be the last one in this one. But then we have some other swing trading related playlists as well. Thank you for your time.